Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. They say markets are interlinked. Sometimes commodities will tell you how the currency is likely to move, and sometimes currency will tell you how the commodity is likely to move. In today's presentation, we are going to discuss three aspects. First, what is the outlook on AUD USD pair? What is the outlook on copper? And lastly, what is the outlook on dollar rupee pair? As most of our viewers knows that we have been very bullish on commodity from last couple of years. In today's presentation, we are going to discuss why we are still bullish on most of the commodity cycle and how it is going to impact AUD USD. If you see the chart, there is a positive correlation between Australian currency, AUD USD and Bloomberg Commodity Index. If commodity prices are moving higher, AUD will get stronger against the dollar and vice versa is also true. Now, if you see the technical chart of AUD USD, it has given a technical breakout of 15 years and it is likely to move higher. It means that AUD is likely to get stronger against the dollar. Now let us understand what are the fundamental factors for the same. There are three fundamental factors which are suggesting that Australian economy is doing great. First, let me start with growth. The growth had been highest in last 3 years. Second, unemployment level has been maintained. Third, since July 2025, they have got the highest trade surplus. So most of the economic data points are showing that Australian economy is doing great. We are expecting Australian economy to do well in terms of growth. Why? Because 50% of global seaborne supply of iron ore is happening from Australia. Second, 30% of Asia's LNG demand comes from Australia, and Australia is largest exporter of coal. Because of all of this region, we are expecting their exports to continue outperform. And now another factor why we expect AUD to do well is China factor. As we all know, that China in terms of its export is making new high in terms of trade surplus. A detailed video we published on 23rd of March. So we are expecting that China to continue to do well in exports, and Australia exports approximately 36% of its exports to China. And the last factor is hawkish Reserve Bank of Australia. If you see, their inflation range is between 2 to 3%, and currently their inflation is near 4%, because of which in last two meeting, Reserve Bank of Australia has increased the interest rate by 25 basis point, and at the same time Fed did not increase the interest rate. That is giving AUD an edge over US dollar. So now let us understand what are the levels we are expecting. AUD USD, which is currently trading near 0.72 kind of level, will have a strong support near 0.70 and 0.68 kind of a level, and it is likely to move towards 0.75 and 0.80. AUD INR, which is currently trading near 66.70 kind of a level, will have a strong support of 63.70 to 64 kind of a level, and it is likely to move towards 70 and 72 kind of levels. In our last video, we had given the view on gold and silver. In today's video, let me give you a view on copper. Copper had given a 20-year trend line breakout. Currently, copper is trading near 6.09 per pound, which is likely to move towards 6.60 and 7.10 kind of levels. Now let us discuss the outlook on rupee. In order to control the volatility, RBI last week announced that oil marketing companies can directly buy from SBI, and they should not come into a direct market. Now let us understand what impact it is going to have on dollar rupee pair. Similar kind of steps has been taken by RBI earlier also in 2013 during taper tandem time, and lastly during Russia-Ukraine war. Because of this, what will happen? Oil marketing companies will not come to the market. Instead of that, they might go to a PSU bank named SBI, and probably RBI is going to supply to SBI and SBI is going to fulfill their needs of oil marketing company. As a result, speculative activity in dollar rupee pair might get controlled. Because of all of this step, this is giving us a clear-cut signal that RBI might not allow dollar rupee pair to get weaker drastically, or free fall of rupee might not happen. Saying that the natural demand for dollar will be there in the market as a country where a net importers of good and highly dependent on FII, FDI, service exports and NRI deposits. From last couple of quarters, we have seen their growth has also slowed down. RBI action might be able to slow down the pace of rupee depreciation, but the trend will only change once global factors calm down. So as of now, we are expecting that 92.20 to 92.50 will act as a strong support for the pair, and it is likely to move towards 93.20 to 93 and a half kind of levels. With this, I will end my today's presentation. जय हिंद, नमस्कार, फिर मिलेंगे नेक्स्ट वीक. थैंक यू.